With a changing market, investing success requires a clear strategy and a track record of performance. If you're serious about building a property portfolio, you need to speak with Lachlan Vidler and his team at Atlas Property Group. As a national finalist for 2022 Buyer's Agent of the Year, Lachlan and his team are ready to build and scale your portfolio in any market. Whether it's financial freedom or a more secure future, Atlas Property Group is here to guide and support your personalised journey. Visit atlaspropertygroup.com.au to book in your discovery call absolutely free of charge.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? It's Phil Tarrant here, host of the Smart Property Investment Show. I hope you're well. If you've been tuning in to the show recently, you would have heard and also probably read about on smartpropertyinvestment.com that I recently entered the commercial market inside of Western Australia, and I've been, Perth in particular, chatting about that, the reasons for it, what I hope has to happen, and why I've chosen Perth over some other markets in Australia. It's something I'm looking at closely. Like most of you, no doubt, you probably were off Perth for about 10 years, probably not the right place to invest. I remember spending some time out there probably 5-6 years ago with the mortgage fraternity, chatting with some real estate agents on stage, and they had their shoulders slumped and their heads in their hand. It was a pretty tough time for real estate agents out there and probably those providing mortgages. But I think it's very different times in Perth. Whether or not this current spike in interest rates may take the shine off Perth, who knows? I want to get a greater understanding of it. So I've gone directly to the source when I need to know about Western Australia property markets, although this gentleman's got very good knowledge right across Australia, but he is based out of Perth. He's not Perth born and bred by memory. I'll quiz me again on that. I think he changed teams at some point from the East Coast. Damian Collins, he's the managing director of Momentum Wealth. He's also the president of the Real Estate Institute of WA for, I think, if my people tell me right, Damian, about another 5 weeks. So you have a successor coming in. How are you, mate? You well?
Well, I'm good, Phil. Yes, I've got about 5 weeks to go, and that'll be up to the board who will elect a new president. But I've enjoyed my 4-year time there, but time to actually focus back on my business and see my kids again. They're probably wondering who I am, so they may or may not be keen to see a bit more of me.
Well, people think being a president of a real estate institute is all beer and skittles and just going to fancy cocktail functions and lobbying. The people in power. There's a lot more work to that, isn't it? There's a lot of grunt that needs to go into it. And no doubt the good people of the Western Australian real estate fraternity are probably quite happy with your tenure there. You've moved on a fair bit.
Yeah, look, I've really enjoyed the role. You do learn a lot about, so there's obviously a board of directors. REIWA is a very successful institute, has a lot of commercial services as well. So I'm effectively chairman of the board of directors. So I've been responsible, obviously, for the governance and overseeing the organisation. But on top of that, particularly in Western Australia, there's a lot of media commitments. The president is the media spokesperson. Yes, you do get to do a lot of lobbying. I've met with the Premier and Deputy Premier recently about various matters. So it's certainly been a good experience. I've thoroughly enjoyed it, and hopefully the members feel I've done a good job. It's time to pass the baton on Phil and as I say, get a bit more back involved in the business, and maybe my kids will want to see me. We'll see.
Well, that's a good idea. Now, maybe you can, whether or not you can talk about this, I'm sure you can if you've just been meeting with the Premier and Deputy Premier. We know what's happening in Queensland right now. And like most property investors, you would have got that email the other day. And if you didn't know about it, you certainly know it now, that they're changing the way in which they're going to be calculating a land tax in Queensland, which is going to hurt the back pocket of a lot of Aussie investors. Nothing like that going to happen in Western Australia any point soon, Damian?
No, I don't think so, Phil. Look, Western Australia has last year's budget surplus was 5 billion, and I think the year before was much similar. So finally, we've got our GST back, 70 cents in the dollar, and although 30 cents goes to the rest of the country, and as a donation to help those less fortunate states. So the budget is in incredibly strong position here. I just can't imagine that would be on the radar when the surplus is so strong that you'd want to start doing that. And I don't know even how much money Queensland's going to raise. All it's going to do is put people off investing in Queensland, and or alternatively, they've got to set up complex structures, set up a separate trust for every asset, and it just gets complicated. It's just unnecessary, and nothing in a rental crisis. Why would you want to say to people, don't come here, which is effectively what they're doing. So let's hope the other states don't follow, but unfortunately history shows they often do, and particularly New South Wales and Victoria in particular got pretty hefty budget deficits, so that's certainly a risk.
Yeah, and I've sort of spoken a little bit about what Queensland. I've been pretty vocal about it, sort of as an Australian investor. I can't make sense of it, and I got the email through the other day, and I tried to work out their calculation. It's a lot of smoke and mirrors in there. However, if you do own property in Queensland, I'd probably be speaking to your accountant pretty quickly to work out what the impact is going to be. Now, this happens at the start of the next financial year by memory, so you have some time to do something about it. But a worst case scenario, Damien, people are going to get slugged a whole bunch more money to hold property in Queensland. What I can see happening, you made reference to, and I know we're here to chat about Perth, but this is important. It's probably one of the biggest seismic shifts to investing in property in some time. There's going to be a lot less incentives for investors to operate in there. Now, I imagine the logic of the Queensland government is, we want to make more homes available for owner-occupiers, right? Well, guess what? In this environment market, they probably can't get a mortgage, number one. So where they're going to live, if investors are leaving in droves because it doesn't make sense, they're either going to up their rents considerably, so it's going to hurt the hip pocket of the renter even more, or they're going to start selling down assets, which are going to drive down the value of real estate in Queensland. There's a lot of ramifications with this. So, what's your sense, mate?
Yeah, it's a real shame. We're seeing that with the residential tenancies laws, Phil, as well. Queensland's also brought in some fairly significant reforms that are very pro-tenant, and no ground terminations, following the footsteps of Victoria. And all these things do, I just boggles my mind sometimes. Ultimately, if we want to keep housing affordable, we need more of it. We need to build more houses, encourage more investment. That's the only thing that's going to keep, because we've got demand from lots of people. We saw at the recent Jobs and Skills Summit that there's going to be nearly 200,000 migrants coming in. So we're a population growth country. The only thing that's going to keep housing affordable is more supply. And yet when you start saying to investors, well, if you come here, you basically got a tenant for life. You can't get rid of them under these no ground rules. And then know that if you own a property in another state, we're going to slug you. In some of the examples I saw, 6 to 800% increase in land tax on your Queensland asset. It's like, well, why would you bother? And yeah, it was good. We want to see more home ownership, absolutely, but there's always a certain percentage of the people who do need to rent for a period of time. And I don't know if you saw it, but I saw something over the weekend. Ireland brought in all these draconian changes. You couldn't get a rent control, couldn't kick people out, higher taxes, et cetera, and Ireland has now got 700 properties for rent in the entire country, and they wonder why. And there was I saw a picture, and there was 150 people lined up for a one-bedroom flat in Ireland somewhere. It's like, well, you get what you reap what you sow, and ultimately across Australia in particular, amongst all the Western countries, we're very much an individual investor, mum and dad market, and any time it's a big asset for these people. It's not run by big corporations. Build to rent, there's a bit of that around, but really that's tiny in the scheme of things. And the individual mum and dad investor is the predominant force in residential real estate. And you start doing things that scare them, and it's a big asset and big investment for them. They're going to run for the hills. You don't blame them. And it's going to be less rental properties and higher rents. But somehow some governments don't seem to understand that. And they think they can just tinker with it and change it, and nothing will happen.
Well, you're speaking very responsibly, Damien. Much like the president of the Real Estate Institute of Western Australia there, I'm happy to be a lot more pointed. Whoever is made these decisions inside of the Queensland government, whether they're trying to pony up the coffers because they've got the games coming up there and someone's got to pay for it, they've just applied a massive handbrake to Queensland. Why would you want to go and live in Queensland now for interstate migration when you probably can't get someone to rent because there's no properties up there? If you're a new migrant coming to Australia, why would you want to go to Queensland? You'd probably choose somewhere else where there is more rental accommodation. To your point, what's happening in Ireland. The issue they've got, and I've been speaking to people, tax lawyers, and they're going, it's unconstitutional what they're doing. How can you apply this draconian measures and it's not even grandfather? It's okay if they said, look, moving forward, this is the way it's going to be. But this is for people who have owned investment properties in Queensland for many years, decades even. So they're going to have some pretty big issues around it. I wouldn't be surprised if you saw some class action stuff. And in 2 years' time, when a new government comes into Queensland, or they have a change of leadership and they go, that probably wasn't a good idea because we're going backwards as a state rather than forwards as a state, going to have a whole bunch of property investors saying, give me my money back. And they're not going to be able to find that inside of the government coffers because they've probably spent their money in other areas, probably irresponsibly. But anyway, this is not a political podcast, Damian, but no doubt you probably echo some of my sentiments.
Well, Phil, I think it's going to be one of those scenarios like negative gearing back in the 80s. You and I are old enough, sadly, to remember the 1980s, and they got rid of negative gearing in 85. Keating said, it's a rort and all this sort of stuff, and particularly in Sydney and Perth, less so in other states. Of course, investors voted with their feet. They held on because they already were grandfathered in, but new investors did not come into the market. We saw rental vacancy rates drop dramatically. They brought it back in 2 or so years later. I suspect Queensland, as long as the other states don't follow, which there's no indication at this stage they will. I don't think New South Wales would do it. And Victoria, who knows? They quite like taxing property down there. But if no one else follows, I suspect when Queensland's probably going to have the worst vacancy rate of anywhere in the country in 2 years because of these rules, I think they're going to there's a reasonable chance they may have to backflip.
Yeah, absolutely. And you think about it, if the other states introduced it, then you'd be paying tax on one property potentially in New South Wales 4 times. In other states, it is, I don't know who comes up with this stuff, but anyway, I think we've done enough. But what it does mean, Damien, is that it may make Perth even more attractive. That's as an investment centre for Australian investors when, to your point, the government there seems to have its books a little bit more in order and positive rather than negative, and you've got that good stuff out there that you can dig it out of the ground and sell it to whoever needs to buy it. That's a good thing. You're keeping a bit more of your GST. You've been moaning about that for years. So it looks like Western Australia's finally got its act together, and we are speaking to Damian Collins, from the Managing Director of Momentum Wealth and current President of Real Estate Institute of WA. Let's talk about Perth, Damian. Before we get there, we've teased everyone. We'll go to a quick break. Stay with us. Back in a moment.
Throughout 2022, we've already seen a huge ebb and flow in the Australian housing market. Property prices increased earlier in the year, but the rate hikes have slowed down price growth over the last few months. Even so, we've seen more new listings hitting the market than we've experienced in recent years. Plus, with many property owners having accrued a significant increase in equity, the market is hot for investors looking to snap up another property that may have reduced in price. To help you find these properties, the team at Pure Property Investment have done all the legwork to identify the top 30 suburbs that have not only shown growth throughout this year, but are also poised for strong capital growth over the next few years. Grab your free top 30 guide to property investment guide today at www.purepropertyinvestment.com.
Welcome back, everyone. It's Phil Tarrant, host of the Smart Property Investment Show with Damian Collins from Momentum Wealth. Now, Damian, seems to be more people eyeing Perth as a potential property investment hotspot. You probably don't like hotspots. It's been simmering for a while now. It's certainly bubbling along. Last time we spoke, well, we've been speaking about this right through COVID. You said, just hang on, everyone. There'll be the right time. It sounds as though it's the right time right now.
Yeah, Phil, I've noticed quite a few East Coast buyers agents representing their clients buying up over here. And I think people might be a bit surprised. You can buy houses for 300, 350, 400,000. And so the market is still going particularly well. It's certainly not booming or running away, but that is not a bad thing in this sort of market, particularly in the last 2 or 3 years. Perth, according to the CoreLogic figures, has probably been the laggard of all the growth in terms of the capital cities. But our national body, the Real Estate Institute of Australia, tracks median house, not median dwelling, but median house. And the March quarter, Sydney was on 1.6 mil, Melbourne was about 1.12, Canberra was 950, Hobart was 820, Brisbane was 760, Adelaide was 650, and little old Perth was 526,000 median. So it comes into this interest rate cycle in a very affordable position, which certainly gives you confidence. No one wants to see interest rates go up, but that certainly gives you confidence. And we've got a real chronic shortage of housing. We had a housing industry. You mentioned earlier about the real estate agents who had their bit slumped over 4 or 5 years ago. Well, so were the builders. The building industry halved over from about 2016, 15 to about 2020. So now that the demand has come back, it's great, but there's not enough labour out there in the market who got the skills to build the houses. So we just can't build enough houses. Our stock for sale is, as we sit here coming into spring, we're sitting at just over 8,000 properties for sale. In terms of properties for rent, we've just on the REIWA.com, we've just dropped below 2,000 for the first time. I can't remember. So
2,000 properties available for rent in
rent.
Western Australia.
No, in Perth. But across the regions, it's, if you include all the regions, it's about 2,500. So for a state that's about 2.8 million people, that's incredibly low. And that's just advertised. Doesn't mean they're actually sitting vacant. Most good property managers, like my team, will advertise it a couple of weeks out to make sure that
continuity.
We've got continuity of tenancy. So it's the rents are going up dramatically. It's about $10 a month at the moment. So I don't see how we're going to get the supply to catch up with demand, particularly now we've got the borders opening, and you're talking about 200,000 people. Of that, Perth will normally get 15 to 18%. It could even get more of that migration because there is so many jobs available, 60,000 jobs according to the Chamber of Commerce. So all those things certainly give me confidence that the market will still progress forward. I certainly don't expect 10 or 20% growth in the next 12 months, but I'm really still seeing that it's got to be 5 or 7% because demand and supply is basic economics. Heaps of demand, not enough supply, and we're on the most affordable capital city and the highest incomes apart from Canberra. So logically, you would suggest all those stack up to being pretty much the best place around the country to withstand what we may see over the next 12 months.
And there's Damian waving the state flag proudly. But, you make a lot of sense there, Damian. And the wrap up for me as an investor would be, yes, we are in a rising rate environment. We'll talk about the impact of that. However, that's probably not going to be as exacerbated for Australian property investors investing in Perth versus other areas, because the size of the dwelling, the size of the loan that you're taking on in order to hold an asset there is going to be smaller. So therefore, any increase in interest rates will be comparative to that, which will be smaller than if you're buying assets in other parts of the nation. Now, what type of Aussie investors are being attracted out to Perth at the moment? Is it those that want to play in those more affordable markets? And I remember back fondly, and no doubt you do as well, 10 plus years ago when you could buy a house that you're talking about in Perth now in Sydney, a 3-bedroom brick in a suburb somewhere for about 300 grand. They're long gone now. I think you mentioned the median there's about 1.1, 1.2, and it's come down back a bit. That stuff still exists in Perth, correct? It sure
does, Phil. These aren't the fanciest suburbs. They're not the Toorak or Double Bay of Perth. They're the lower socioeconomic areas out in the southeast corridor and even the southern corridor. But Armidale, which is on a train line, it's about 25k out of the city. Around that area, you can still get houses in the 300s. Certainly going into Kwinana, which is an industrial area, similar sort of scenario. You can get houses that are in the 300 to 400 range, and they're generally getting gross yields circa 5.5%. So pretty strong in those sort of price points. You will have no land tax unless you're a poor old Queensland investor, where you might get slugged. But if you're just if you're Sydney investing in Western Australia, the land tax threshold is 300,000, and that's for the land, not the building on top. So generally, that lower price end, your first investment in Western Australia, you'll pay zero land tax. So even with your cost, you're still in a pretty good net yield. Now, we're not back in the. I could certainly say to people 12 months ago in Perth, you'd be positively geared. Less likely now that we're starting to pay up towards 4.5%. It obviously depends on what sort of deposit you put down, but nonetheless, the cost of holding that property are pretty small. And with the rents where they are, I certainly think we're going to see continued rent growth for some time yet. So you've got a good chance that yields could continue to pop up even after you've purchased.
You talk about continued upward pressure on rents. You spoke about interest rate migration and Perth being attractive. I think you spoke about, was it 60,000 vacancies at the moment in relation to jobs? So a lot of Aussies are thinking about moving out there, and it's good quality of life. Well, if you've never been out to Western Australia, I recommend going to check it out. I reckon it's probably what Sydney was 50 years ago, as in people are nice and friendly and a bit more relaxed. And I know that appeals to a lot of people, particularly in a post-COVID environment. But you spoke about, we're talking about a lot of the positive of this, but to me, there's also huge negatives with that. You got challenges for the state in terms of, yes, they've got some dollars in the bank, but they're going to have to move pretty quickly to get moving on building housing to support job growth. And Perth is one of those markets. Western Australia is one of those markets. You can speak better to this, Damian. Which sort of it's very cyclical in terms of how the job market is, how the economy operates. Now, a lot of Australian investors were attracted out to Perth probably 10, 15 years ago, and a lot of them probably blew their dough, and they're probably only getting the prices back to where they paid for them way back then. So, that's that cyclical nature of Perth. However, it's a matter of timing, the Perth market, probably more so than some of the other capital city markets. It's not as forgiving in terms of your timing. Is that a fair sentiment, a fair place for us to start this conversation right now? As in, if you were thinking about expanding out into Perth and buying more, or your first asset in Perth, you've got to get that market timing absolutely right.
I feel no doubt it is a cyclical market, and it's very much tied to the mining sector and the oil and gas, and predominantly around the two biggest commodities by a long, long way are iron ore and also gas. So we've got huge gas production up in the northwest, and also in the Pilbara we've got $100 and something billion of iron ore going out every year, and but there is more commodities. Lithium's a big one at the moment. We're certainly spinning a lot of that out, and a lot of mines starting up to get going on. That's obviously for the new technology with batteries. Nickel's another big commodity. So, and gold. They're all big commodities, but one way or the other, it's a commodity-based town. The government is always looking at doing different things about broadening the economic base, but look, we are a mining-based town, and that's likely to be that way for a long time. So yes, it is more volatile. And certainly the last 15 or so, we peaked in 2007, and that was when the price of a house in Perth was pretty close to Sydney, if not equal to Sydney. And that was certainly, in hindsight, well overcooked. But I think at the same time, now we've gone from the sublime to the ridiculous, where certainly Perth should never have been the same price as Sydney, but at the same time, Perth shouldn't be 1/3 of the price of Sydney. And that's where we sit today on the median's about 520 to compared to about 1.6. There's, I look at it, Perth should be pretty similar to Brisbane. They're similar size capital cities, just over two and a bit million people. Perth has a higher income. And Brisbane sits at 760 now, and Perth at 526. So I think about half of Sydney, or just under half, is probably maybe where it would sit, similar to Brisbane. It doesn't make any sense to me that Adelaide's more expensive and Hobart is, believe it or not, 300 grand more expensive. That just doesn't stack up when you look at the strengths of the economies and so forth. So look, it carries some risk, and obviously we might talk about some of the regions, the Pilbara, if you want a bit later on, what's going on there. But certainly it is a commodity-based town. It may rise more rapidly than some of the other cities. It may also go backwards more rapidly than some of the other cities. So getting in at the right time is certainly critical. Although I'd say the last 10 years, I don't think anyone would have forecasted it would have been as bad as it was for as long as it was. I watched with awe and envy over east about how strong those markets have been, and certainly I feel that we overshot in 2007. It certainly feels to me we've been undershot over here for some time, and on a risk-adjusted return, you look at what capital city is more likely to double, Sydney, Melbourne, or Perth over the next decade. I think you'd have to say you've got a fair better chance of doing better with your money over this side of the country. It's hard to see Sydney going from 1.6 to 3.2. Much easier to see Perth going from 520 to just over $1 million and still be only 2/3 of the price of Sydney.
It gives some sense of livability and why people are choosing Perth or Western Australia as home. And for a lot of people, it's lifestyle choice. A lot of people, it's employment choice. And you speak there about the disparity of prices, sort of trying to compare like for like, apples with apples, Perth versus Adelaide, Perth versus Brizzy. But the discrepancy in prices and the significant undervalue of Perth real estate, you got to sit there and just go, I've been recording this podcast for 5 years, and you try and put a lot of science and maths to it all, but sometimes you just go, well, it doesn't make sense. So is all the numbers we talk about largely irrelevant? I don't know. I don't know the answer to it, because I do concur with you, particularly when you talk about Hobart and price differentials between Hobart and Perth. Yeah, it's crazy. Look, Hobart is been very much influenced by the people selling out of Sydney and Melbourne who are very cashed up, and so it's not about economics necessarily for the local people. And we've seen that obviously Sydney's been influenced by overseas buyers in a lot of respects. A lot of money coming out of a wealthier region through Asia, and they come in with a checkbook and write a check for 10 mil. All of a sudden that lifts the values of all the other properties around, and suddenly people got this equity. So it doesn't necessarily take a huge amount to change a market. And look, Perth did that. Perth went from about 670 to 500 in about just under 3 years back in that early 2000s. And
That was just the mining boom. It was, and in hindsight, clearly it was overcooked and went too far. But on all the levels, you look at it: affordability, shortage of housing, certainly the rental yields. It does stack up. Interesting, Phil, you talk about the migrants. We tend to I am from Melbourne, but I have now, apart from my AFL team, I've switched allegiance to the West, but still keeping my AFL team, but out of Melbourne. But the Perth is very much, people over East Coast see it as a long way away. It's a different time zone. So there's not that many people who will pack up in Sydney and Melbourne and move to Perth for lifestyle. What they typically come here is for job opportunities. And so that's the leading indicator. When I've looked back and our research team have looked back, the leading indicator in the Perth housing market is jobs and state final demand. So the strength of the economy, and that draws the people. The people, you might pack up in the western suburbs of Sydney and go, oh, it's just too expensive, too hard, or in Melbourne, and you might go, I'm going to Queensland. And that's where historically people have gone. The baby boomers have gone a bit further to Tasmania because they didn't need to worry about economic opportunities as much. It was more about lifestyle, so they could come into Hobart and other places and weren't necessarily as concerned about jobs because they were there more about lifestyle and cashing out of their home and equity and using it for retirement. So historically, the East Coast moves to Queensland. People will come here into the West for jobs, and so when we sit with 60,000 jobs, it won't be as easy to get them out of the East Coast as it used to be because everyone over in the East Coast is at the moment. We'll see what interest rates do, but there is a lot of jobs over there at the moment. So we are starting to get some. We had a reasonable pickup in migration during COVID, so we went from a net loss interstate when that really deep downturn of 16, 17, 18 and 19, we were losing 15, 20,000 people a year leaving the state, going over east. That turned around during COVID, and particularly the back end of COVID with all the jobs. We picked up, I think, 13,000 people the other way. And now the borders are open. I would expect of 195,000, if they get that many, Perth will get about 30,000 of those, as it historically does, particularly with the job opportunities. That's a lot of people, and not sure where they're going to live. I think that's a problem right across the country. It's finding a house for them, but certainly, if you look back, West Australia's state final demand and job vacancies are very strong correlation between the property market.
Yeah, and again, it just showcases just how complicated property markets are, and sometimes they don't make sense. But when you start applying some of the challenges that Australia's faced over the last couple of years, and particularly WA, and it's great fun scoring how premiers navigated the COVID pandemic. Yours was pretty steadfast to a lot of criticism, but he's by and large done a pretty reasonable job. He has those challenges now about attracting not only more Aussies out there, that when new to Australian migrants come in, they choose Perth over other places. And we had the big summit, Albanese summit last week, which sort of spoke about how they're going to try and fast track skilled migration, a lot of that in mining. And we're going through, to your point, Damian, this sort of new sort of mini mining boom. A lot of people sort of blew their dough in Western Australia last time around because I thought the mining boom was going to last forever. There was this period of time when they were building all the new mines, and then it just gets into production. Two very different sets of skills and different needs of people. There's new markets for new types of minerals coming out of the ground as technology increases, and you spoke there about lithium. So Australia's got plenty of that stuff. It's got plenty of other stuff that no one really knows what to do with yet. Probably in time, some smart person will work out some use for it. So you'll see these peaks and troughs with WA economy and its interconnected real estate moving forward. It's good to see things are normalised now. Borders are open. Any real issues do you see, Damian? We sort of spoke about how the impact may be less in terms of interest rates. How high will interest rates go, and when will it start impacting the WA market?
As we sit here today, Phil, in early September, I get the weekly stats every week on the sales and what's going on in new listings. And right now, the sales have held up completely. We have not seen any drop in sales at all compared to where we were before the start of the interest rate cycle. In fact, my buyer's agent team telling me it's very, very competitive out there in the market. The median house in Perth at the moment sells in 18 days, so 2.5 weeks. half the houses are going. So, and we don't generally run an auction market like Sydney, Melbourne, a 4-week campaign. It's just put on the market for sale, and sometimes they can sell on the first weekend. So fundamentally, the demand is still very strong. It hasn't had an impact yet. Look, ultimately, it has to have some impact. I mean, the servicing rates would not have gone up, but it's certainly so far people don't seem to be that impacted. And I guess it's probably capacity. The average income in Western Australia is higher than anywhere else except the ACT, and house prices where they are sitting at the cheapest of all the major capital cities means that even on a $500,000 mortgage, if we get to 5% mortgage rates, which we will be getting to fairly soon, it's still only $500 a week. That's you're going to pay the same amount in rent. So
it's mad, I can see where it is, particularly when you throw in this Queensland equation. I don't know what the right term. This sort of collective arbitrage of higher salaries and lower property prices for domiciled Perth investors. However, on the other flip side of it, for a lot of Australian property investors outside of Perth, maybe the only place where you can service the debt required to be a property investor is in Perth as well. So all these things are moving around. Make sure Perth is part of any decision making you make. And you mentioned there's a lot of East Coast buyers agents sort of hanging around in Perth right now. I reckon you should be sitting there at the airport, blocking them, get them off those Qantas planes, or sending them back on the red eye so they never come back again, because it's hot, it's competitive. And when you talk about those days on market of 2 weeks, real estate's moving. So we'll keep an eye on this. Now, Damian, we've got a few more minutes, but I want to actually get in a bit of asset selection when it comes to Perth, and whenever I chat with you, and also the wider Western Australian state. But it's about what you buy and where you buy it in Perth as much as when you buy it. We'll just go to another break. Stay with us. Back in a moment.
Have you considered adding Perth property to your portfolio? Momentum Wealth has experts on the ground to help you find the best opportunities in WA. They'll take care of everything from shortlisting and inspecting properties right through to negotiating the best deal on your behalf. And when it comes to managing your property, they have experts for that too. Contact their award-winning team today at momentumwealth.com.au and get your advantage in Perth's property market.
Welcome back. Phil Tarrant from Smart Property Investment with Damian Collins from Momentum Wealth. Damian, resi or commercial, what are you buying right now? What's your recommendations for Aussie investors?
Well, Phil, it really comes down to personal circumstances. My philosophy on this has been and always has been is once I really started understanding the property market, 20-something years ago, is resi is the great place to start. So when you're income earning phase, you've got decent income. You can wear some negative gearing while you're gearing up to build some wealth through that residential market. You're not getting a great yield, but you can afford it because you've got an income stream. Great. Resi is a great place to start, but it's not where you want to end up. It's when you get to retirement, residential property is probably going to net you maybe 3%, in some capital cities even lower after you pay your taxes. And let's not go to Queensland where it might even be less of a yield now with all their things going on. But commercial, you can generally net maybe 6, 7%, depends on the asset. And often the tenant pays all the outgoings. It does carry some more risk. And so, but I think it's got to be part of someone's blended portfolio. And you don't have to necessarily go and buy it on your own, depending on your wealth structure. There are funds out there who allow you to buy into commercial properties for 50,000, 100,000, and that gives you a bit of diversity to your asset class as well. Same with development. Everyone wants development's really sexy, but to do a decent sized development these days, you need millions of dollars anywhere across the country. There are opportunities as you grow your wealth. I think my philosophy on this is you start in residential, get a few under your belt, depending on your age bracket, your retirement plans, and talk to your property advisor about what you want to do. Then those things can start to come into play as being a part of a broader diversified property portfolio. And if you do it right, you should hopefully get to a situation where you've got enough net assets that your residential commercial portfolio, maybe a bit of development income to supplement that, will get you through from whatever age you want to retire, right through to you go to the great gig in the sky. So I totally believe that you need to be diverse. I just don't think building an entire property portfolio purely residential is necessarily the right way to go.
And for the reason we spoke about, Perth may be the only place, price-wise, debt-wise, that a lot of Australians can invest, or it might be a great place to propel your property investment journey if you're a new or young investor, and hopefully getting this uplift that you've mentioned we should see in the Perth market moving forward, not as overcooked as what it was last cycle, but give you some capital growth, and you get to the point where you can actually extract that, recycle it, buy something else, or you may move into commercial. If you're new to investing and you're buying resi, sort of price points you mentioned, sort of 300-400 grand. Give us some places to have a look at. I know you're not going to give us all the secret sauce, but give us some broad geographic areas where Aussie investors should be looking.
Well, it'll depend on your price bracket. Typically, for many of our clients, our philosophy on residential is we want to try and buy a house where we can, because the house is got the land value component. It's the land goes up, buildings go down. I think every property investor knows that. It doesn't mean apartments can have a reasonable component of land value, but you just got to be conscious of how much that land value component is. So if you've got $500,000 in as a budget in Perth, you buy a house every day. We can find plenty of great properties up the Northern Corridor, Heathridge, Craigie, some of those locations. We've bought a lot of properties. If you're a bit lower in the budget, 300 to 400s, certainly I would focus on that Armidale, Gosnells area. Okay, it's not, as I said, it's not Toorak and Double Bay end of town. It's lower socioeconomic, but good, solid rental returns and well below replacement value. I mean, to buy a house and land out there now, block going to cost you $250. The house is going to cost you $250 to build. So they're well below replacement value. If you're looking to invest in Perth, certainly focus. People want to live near the coast, and they want to live near infrastructure train lines. So that's, I think Western Australia and Perth in particular, that train line value that you see in Sydney, Melbourne's not priced in yet. As the city gets bigger, it's 2.2 million people now. As it gets to 3 million, 4 million, as it will over the next 10, 20, 30 odd years, that'll become even more important. We see that in Sydney. If you're within that walking catchment to a train station, your prices are anywhere from 5 to 10% higher. You will see that in Perth as well. So look, obviously, talk to a buyer's agent or do your own research. But I do see some people coming over here at the moment and East Coast and not doing their research, paying silly prices in some cases dud properties. So I think you might want to think about getting some advice about where some of those better locations are. Yeah,
and I've been chatting about it for years. I use a buyer's agent for all my buying. Because I want to be the person that doesn't buy the dud property overpriced. That doesn't mean you need to do that. You can, if you want to do the hard work yourself and make informed decisions, expect to put the work in behind it, because there are dud properties out there, and I know most property investors don't want dud properties. Particularly, if you think about some of the really sad stories from the last Perth boom, were people buying in suburbs to the north, regions to the north, right at the top of the market, and pretty much overnight their properties went from $700,000 in value to $200,000, which is probably the natural price for it. So that happened, right? And will it happen again? Who knows? What's your thoughts, Damian? Is there going to be this sort of boom bust mining scenario that we saw last time around happen again? And how many Aussies are going to sort of fall foul to it?
Well, Phil, there is some East Coast buying up in the Pilbara. So we were very anti the Pilbara in that 2010 to 2012 period, because the prices went stupid. And as you mentioned, it was never going to be stable and sustainable to have $2,000 a week rent for a 4-bed, 1-bath house in the middle of a desert up in the Pilbara. And it was all about the fact that there was a whole variety of reasons you couldn't get supply into the market. The mining town was booming. As you say, they went down to 200,000. We bought well over 100 properties up there in 2019, 2020, and into early 2021. Delighted to say some of those ones we bought for 135,000. We're getting offers of 320, 330 now. It's got some legs in it still. It is still with construction costs going up across the country. Ultimately, property prices in the long run will be somewhere around replacement value, which is the land and the building. Now, the land is in the Pilbara is not worth that much. You've got to service the lots, but you can get a block of land in Headland, South Headland, 110 to 160,000, which is pretty much the infrastructure costs, and there's plenty of land out there in the long run. But but the houses now are costing about 600,000 to build. It might have cost, and in some cases I've heard 700,000 from some of the builders, because
that's crazy.
That's what I mean. So they've got a critical shortage of housing up there, and anything new is going to cost, pretty much for the land and the building, is going to cost you into the 700s, maybe in the 800s. So
it's just uneconomical.
It is. And then the insurance costs are very high up there. But the mining companies are making so much money that they're some of those people looking to buy some of the stock we've been offered off market, we haven't had them for sale, have been mining companies. So we're certainly looking at some of that 120 odd properties that we bought up there. We might offload some of them. So and we did that in some of our funds that we run. So look, the Pilbara, Perth is cyclical, but the Pilbara is cyclical times 10. So Perth, if maybe you would still hold the long run. You certainly hope you wouldn't see the last 5 years like we did again. But the Pilbara, no, you definitely unlikely ever want to be there long run. You want to be in at the right time and out at the right time. If you do get it right, you could do well. Now, the best time to buy in the Pilbara was 2 years ago. I still think it's got some legs, though. The median is only circa 400 in Headland. It's a massive critical shortage. You're not going to necessarily double your money from here, but you might get another 30, 40% uplift. Rental yields are very strong. Even with the high insurance costs, you're still netting around 6.5 to 7.5 net after all your costs. But you want to get 12% gross on that just because the costs are running. So look, my philosophy, and I always said to people, the mining towns are speculative, the investments. So if we were stock investors, we'd have our blue chips. And that might be major capital cities, good, solid. You're not going to get rich overnight, but they're solid, steady, give you good rental return and give you decent capital growth in the long run. Then you might have your spec portfolio on the stock market. That might be mining shares. In your property portfolio, it might be a mining town. Wouldn't put all your eggs in that basket, but if someone's got a portfolio under their belt, got some spare capital, have a look. Yeah, but you want to make sure you get out at the right time. I see people hang on. And they go, it'll come back. And as you mentioned there, lots of people went from 700,000 or 800,000 to 200,000. Mortgagee sales everywhere. You don't want to be in that category. You want to be the one who bought it at the bottom and sold near the top. You'll never get it perfectly right, but it's definitely not a market for the long run.
Yeah. So a catch-all for me is buyer beware if you want to operate in those areas, and you probably want some experience. I wouldn't be doing it if it was your first investment, right? You're rolling the dice in some way. Hence the reason why, to Damian's point, is a speculative investment. If you want to give it a crack and you think your timing's good, go for it. But for most, it's probably not right. And just be careful because as things start booming along and building comes back, you're going to see a lot of advertising around buy a house, investment property, negative geared in a mining area. We saw it last time. You're going to see it again. Damian, I feel a lot more informed. Thank you so much for my brief. And it is my brief because it helps me shape my investment decisions. But fortunately, there's thousands of other people listening to this that get the benefit of it, of the Perth market. So highly appreciate it. Speak on behalf of probably most people with property in Western Australia for your tenure steering the real estate institute there, mate. Thank you.
My pleasure, Phil. Thanks.
Nice one. That's Damian Collins, MD, Momentum Wealth. You can go and track these guys down online. Just Google Momentum Wealth. You'll find them if you're looking at the Perth market. But you also do stuff right across Australia, don't you, Damian?
We do. So our residential team buy across the country for our clients, but also in our commercial side, we do run those syndicates right across the country. So buying assets and all the major
I want to learn
capitals.
more about that. So I'm going to get you on and quiz you about that, mate, because it's another way for if you don't want to go all in by yourself, you can actually still invest in probably more assets or different assets within a fund. So we'll get Damian and have a chat about that. Remember, smartpropertyinvestment.com.au. Smart Property HQ is the social handle. Remember, please, a favour for me. Damian's no doubt going to do this as soon as we finish the podcast. Please leave those reviews. Keep them coming. It's just not myself here. I've got a big team here who make me sound good, do all the heavy lifting around this. So they get a real kick out of those positive reviews. See you next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.